with me, Kudzisharara, and today we've got another special guest from a strong stockbroking firm, Ingenium Capital, and I'm joined by Langton Nyatsanza, who is a stockbroker with the firm, and today he's here to share with us insights with regards to the Zimbabwe Stock Exchange as well as the Victoria Falls Stock Exchange in terms of how the market has been behaving and performing in 2025. Langton, welcome to the Money and Markets podcast.
Greetings to your viewers.
Thank you. So let's get straight into it. Langton, we are almost in the third month of the year 2025. How has it been so far in the year?
Yeah, the year started off very slow. I think outside a few block trades, there hasn't been a lot of volume to go around. Even the spread of trades across the counters has been very thin, which is not really surprising given the stance, the policy stance that was adopted by Treasury and the central bank late last year, which just tightened the screws on liquidity. So you'll understand that the market is a destination for excess cash. And when there's no liquidity, there's no excess cash. So we're in a bit of a dry spell where a lot of the transactions are driven by other motives beyond savings.
Yeah. So we are, like we said, we are now in March. Nothing much has happened. What's your outlook like for 2025? Are you optimistic, cautious, or pessimistic, and why?
Okay, so I would say I'm on the cautious side. I believe that the current policies is contractionary, which means it's slowing down economic activity. And there's a fine balance between maintaining rate stability and actually putting the economy into a tailspin or a recession. So when that point is reached, there may be a bit of give on the policy side. That being said, what this has done is it has presented a lot of buying opportunities on the market. And I would echo your call. I listen to you sometimes on radio, telling people that this year is a buying year. And I think people should be buying stocks this year.
But if the market is to 10, I know the market every day, there are winners and losers. But obviously, we always want the market that is probably rallying. If the market is to 10 and maybe in terms of the number of trades improving, as well as obviously the capital gains, what sort of fundamentals do you think would turn the market? What could be the primary drivers?
I think the primary driver is actually the liquidity aspect. This is across the economy, not just pointed at the markets. Because once there's liquidity, then velocity of cash increases, which means earnings in general begin to go up because the dollar circulates a lot more each time it goes out. More economic activity means more disposable income, means more savings, means a more vibrant market. So it's really about stoking the economy into some level of activity. And yeah, the informal angle, it really needs to formalize because it's only then that savings begin to matter when you're in the formal space. So I think those are the areas I would consider.
And maybe taking you back a little bit into 2025, there was a time when there was a significant gap between the parallel market exchange rate and the formal exchange rate. But you would think that when you've got and also inflation, I think in October, inflation peaked to 37.5%. And traditionally, you would say people trying to hedge against that inflation and seeing stocks rallying, but we didn't see that in 2024. What do you think were the major factors why we didn't see that sort of hedging taking place?
Okay, so one of the things that's at play in the market is the profile of investor changed over the past, call it 18 to 24 months, where pension funds began to comply with IPEC regulations around weights, listed, unlisted property, etc. So they were net sellers of equities. You couple that with foreign investors also being net sellers of equities. The people who came in to buy were people who were looking to hedge the ZWG balances or ZWL when it began. So you had more of hedging investors coming into the market. So fast forward to October, the market isn't moving, so the hedge is not quite working. So if I am XYZ and I want to hedge my earnings, I now need a new destination because the market is not performing as well. I think you noticed that the gold coin became a vogue last year simply because it was a better hedge than the market. So when savings increase and pension funds begin to perform again, you'll find that they'll begin to invest back into shares, and you'll have a stable market where you've got predictable movements. And yeah, I think I've sort of answered your question in terms of what really happened in October. Why didn't it rally? There was just not enough buying. Never mind that the liquidity was also not there.
So earlier on, you said that you, when you sometimes to listen to what I say on radio, that this year is a buying year. But some would then argue in saying, well, the ZSE has become like a value trap. Do you agree with that statement, that the ZSE is probably becoming a value trap where you continue to be in the same place?
I don't agree. The value trap is a short-term view of markets. Markets, by their nature, are long cycles. And when they're in troughs like this, you don't throw all your money in one go. You accumulate slowly. You average out your holding costs. When the market turns, you'll actually realize that having a stronger position gives you a bit more say in the prices that you'll get if you choose to dispose. But on average, the seasoned investor targets the dividend more than the capital appreciation.
Is that the message that you're telling your investors? What are you telling your clients there?
I'm telling them buy the dividend.
Talking about dividends, today Econet released their final dividend. I think it was 0.73 cents, and taking its financial year 2025 financial year to, I think it's a 1.76 cents, which according to my calculations at yesterday's prices, I think it gives us a dividend yield of probably 16%, which is one of the highest. Because I was looking at, I think it's a 350. If you then, if you divide that by an exchange rate of 33, which is widely used at the moment in the market, you get roughly about, it's trading at about 10.7 cents. So that's how I got the 16% dividend yield. And you're saying buy the dividend. Is it something that is widespread across the market, or there are just a few counters that people can look at?
So I think, call it 2024 and the tail end of 2023, a lot of companies started paying out dividends. but you need to take your time and look at the sustainability of each business and the sectors that they're operating in. I would definitely buy stuff that's consumer facing, that's fast moving. That's where you're likely to continue to get a dividend. Other areas are definitely affected by the liquidity issues and the slowness in the economy. So not every guy is a buy right now, but someone who can sustainably pay a dividend, yeah, that's the guy to look for.
Okay. So when it comes to investing, there's a return, but there's also the risk factors. What are the main risks or challenges that investors should be aware of or when investing on the ZSE?
Okay, so the number one risk is you buy a company today and it closes tomorrow. So that's really the risk that you face. Zim becomes special in that you can wake up and the market is not open. But the primary risk is really the business not being a going concern. You mitigate that by the amount of research you do. Be sure before you buy. Look both ways, not twice, but 3 times. And yeah, keep track of your investment. This idea of throwing money at the market and then disappearing and hoping it'll grow, it doesn't work. You need to be on top of your investment. If you're invested in a beverage producer, understand the trends that are there. Are volumes going up? Are they going down? Margins going up, going down? What's happening to cash flow? Those usual indicators that will tell you whether the business is still safe or it's going into distress. You'd rather save your capital for something else than to go down with the ship.
You know, in other markets, Langton, we have, for example, you've got your stop losses to try and manage risk. Is it something that is applicable here in Zimbabwe as stockbrokers? Is it something that you would encourage, especially retail investors, that they have that? They might not have time to be tracking their shares every day, but is it something that can be applicable in terms of stop losses? I give you my order and tell you that when you see this counter going to this level, please sell.
Yeah, that's something that can be implemented. And I guess with the developments behind the scenes where both the VFX and the ZSE are trying to reduce turnaround time for trades to T+2, and also at the opportune time introduce intraday trading. So these are now going to empower the retail investor particularly. And the tools you talk about, stop losses, become very material in such an environment because you expect that there will be a bit more volatility there and also a bit more chance to make a penny here and there.
So you say that buy and forget doesn't work, but when you also talk to other market watchers, they'll tell you that trading probably doesn't make you money. It actually loses money through transaction costs and the like. What sort of advice would you give to retail investors? Because I think a market that has got retail investors is also a market that is probably liquid and also active.
Right. So there's the issue that you should not put all your eggs in one basket. When you have a portfolio of $100, split it into 3 segments: a core segment, a speculative segment, and the segment that you can trade, or call it a trading segment. Buy and forget, we said we don't want that, but buy and hold is a strategy. it just means that you are paying attention to the investment. So you've got your core portfolio, which which gives you the dividend, which gives you security. Then you've got the more speculative aspect, where you buy deeply discounted stocks and hope that they give you a huge capital uplift. Then you've got your trading side. You can trade in anything that has the right level of volatility for you to make short-term returns. So if a counter trades up and down frequently, then that's the one you put. It doesn't matter whether it's the same one in the core portfolio or not, but a fraction of that would be trading, a trading part of the portfolio. Doing that optimizes your return, but also it keeps you interested in the market. Whereas when you buy and hold, you are likely to buy and forget. But if you have things that keep bringing you back to the market, then you actually find that your returns are better, and your understanding of the market actually improves as well.
Thank you. So as market players, as stockbrokers and many other players that are within the value chain, what are you doing to make sure that you make retail investors comfortable in trading? And maybe what would be your advice to individuals who are new to investing in the stock market?
Right. I guess I can't speak for everybody, so
yes,
I'll speak for myself. With
one thing you are here, obviously, talking to me is another way of putting the word out there, giving insights.
Yeah. So for the retail investor, once we have the discussion, part of that discussion is me transferring ownership of the trade to the client. So because you're new, we'll walk through the ropes together. But as quickly as possible, I want you, the client, to start calling the shots. And I will advise you whether your decision is right or whatever I think about your decision before we agree to execute that decision. Why? Because the more knowledgeable the investor, the better the results, the more his friends or her friends will come to the market. Investing is very difficult to advertise. It requires somebody to actually enjoy the benefit of the investment for them to encourage other people to jump into the waters. Putting an advert on ZTN or ZTV or whatever platform, yes, it creates awareness, but it's usually not enough of a magnet to bring people into the market. The success stories are the ones that bring people into the market. And it's always much, much more impactful when it's somebody you know.
And maybe just switching over to the Victoria Falls Stock Exchange, are you, maybe for lack of a better word, are you happy with what's happening there? If you're not happy, what would you want to see happening there?
I would say I'm happy with what's happening there. The market is improving in terms of liquidity. You are getting more and more trades per day. Even the average daily trade is going up, and it's spread across at least 6 counters, which is good. Obviously, you'd like to see a bit more liquidity on the counters themselves. You've got things like Caledonia, where if somebody buys, they don't want to sell, so things that are tightly held make trading hard. So that's maybe the thing that I would like to see, more liquidity in the counters so that more people can come in and trade. But it's a fledgling exchange, and it's on a growth trajectory. So yes, I would say I'm happy in the main with what's going on with the VFX.
Maybe my last question, Langton, is how long have you been a stockbroker? And if someone is going to come to you, what can they expect as a stockbroker?
Okay, so I've been in this industry since 2001. So this is year number 24. I've been a stockbroker since 2005. So this is year number 20.
Yeah. And I'm saying, my question is, if somebody is to come to you as a stockbroker, what can they expect from you? What sort of service are you going to give them?
Okay, so I alluded to earlier. I'm more of a hands-on, so I like to tutor the client into running their own portfolio. Um, so yeah, that's the aspect I would look at. One of the things I'm free with is advice. So you can ask me what I think, and I'll tell you honestly. Whether the trade happens with me or with somebody else, yeah, I don't mind. As long as the trade happens, it means liquidity is improving, and liquidity means more liquidity. So I'm one who continue to encourage the little guy to come in, the big guy to come in as well. In terms of how big or how small, um, my philosophy is whatever money is not going to pay school fees or buy bread, yeah, bring that to the market. So if it's $10, that's fine. If it's $100, that's also fine. But do it consistently. We want to grow the quality of investors, and we want to grow the number of investors. As you keep saying, we need to rebuild the savings culture in Zim.
And I know I said lastly, but if somebody is coming to Ingenium Capital, how old is Ingenium Capital now? It's 3 years, 4 years? 4 years.
Ingenium is now in year 4.
Ingenium is year 4. And
Yeah.
what sort of services do you have now? I know you started with the stockbroking firm. What else can we get there if we are to come to Ingenium?
All right. So Ingenium now has an advisory business. So we advise people around capital structure, around capital raise, around their business in general. So if you need specific advice on what to do with your business, or when you want to start a business or move into something new, you want to buy a business, come talk to us. We'll look into that for you. If you want a specific element of research done, you can commission us under that business to do that research for you. We also have a real estate arm, whether it's property management, property sales. You're looking for a specific type of property, you can also ask us to do that for you. You want to do a project in construction, you can talk to us about that as well. So yeah, the suite of services is growing under Ingenium.
Thank you. I was talking to Langton Nyatsanza, who is a stockbroker for the past 20 years and in the market for 24 years. And he was giving us his insights with regards the local markets, especially the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange. Langton, thank you so much for taking your time to be with us.
Thanks, Kuzi.
Thank you. Bye-bye.